then the next halving could lead to prices somewhere, and I make a very wide range. Some people don't like it, but somewhere between 100,000 and a million. So that's on average would be like, indeed, those 300,000 times 3 or divided by 3 as a range. But 300,000, absolutely. So I have no doubt whatsoever that we go to that 100,000, 1 million range. And no matter how you look at it, the current price is a steal if that's what you believe. So yeah, I'm very optimistic, but again, a model is a model. But you can come to those numbers at the way you did, and just looking fundamentally. If adoption goes on, if more countries come in, if new buyers come in, don't forget that all the buyers above 60,000 already sold. They're gone. So
yeah,
we're looking at 80% from the top, but there is nobody who bought at the top left anymore. So it's a crazy number to look at. Essentially, it's more older, and there's a lot of coins going being sold last couple of months, and that's all at the 20 or sub 20,000 level. So all the new buyers, all the ones that have the coins right now, are looking at 20,000, maybe a little bit less price, and they're hoping, of course, for 100,000 or more, and they have the time. They'll wait a couple of years, no problem. We probably have another bull market, but the big question, of course, is when. On the other hand, the bear markets are part of the game. In the bull markets, we're all partying, dreaming about the moon, buying Lambos, and the bear markets are good for building and talking about the fundamental stuff. And there's a lot of fundamental things going on. So, well, I guess we can't do without the bear markets and have to embrace them. So let's embrace it, and for sure the next bull run will come, unless Bitcoin is dead. But that's just not a scenario I think is realistic. Assuming that Bitcoin is not dead after 12 years, and the fundamental innovation that it really is, given that, we might assume the bull market will resume in some time. Could be today, could be tomorrow, or some months away. But yeah, that's very hopeful.
During the last bull run, you obviously gained renown for being incredibly accurate with price predictions as to what was going to happen at any given month. And probably that was a bit of a pressure for you, I would imagine, because nobody can be right all the time. And eventually, obviously, some of those predictions were going to be wrong. What are you looking at now that stock to flow? I don't even know if we can say it failed. Maybe talk about, where stock to flow is now, what you're doing with modeling, and sort of what it was like to be viewed as this person who had, almost a crystal ball, which inevitably meant there would be times when you would be wrong in the future.
Yeah, there was pressure. It was no matter how much you said, like, hey, it's a bit of luck as well. I have very, very rough models, and everybody that understands the model, they know that, but they're very rough. So being exactly right, and certainly 3 times in a row, that's just pure luck. But no matter how much you say that, I gained 1 million followers in 2 months, and that's purely based on that random lucky shot. And traditional finance guy, an investor, ex-institutional investor, I should say, because I quit 2 years ago. But we were always working in the dark, never in the spotlights, and certainly not with 2 million people and more looking over your shoulders. So my natural habit was to publish the stuff. I was excited about it. I had 100 followers in March 20, or maybe 1,000 in March 2019, and published that stuff, and then it exploded. So it has been a steep learning curve, has been fun. And lately, there is pressure, and I understand that. I understand that if you're at a loss, and bought maybe because everybody was bullish and my models were bullish as well, then you're maybe angry, or you're anxious for for the next bull market and to be in a profit again. But yeah, it's so that's one. But maybe very specifically, the model that was right 3 times in a row wasn't even the stock to flow model, right? I think that's the biggest misunderstanding that's still present today. That was a failed floor model. So I was, as a model guy, I make multiple models, and everybody that follows me knows that. I mean, I must have like 20 models that I frequently tweet about and have charts about. But the floor model was sort of, yeah, like the name says, it was sort of predicting where the floor, what the absolute floor would be. But of course, Bitcoin crashed right through that, and yeah, so the floor model failed. But the stock to flow model, in my opinion, did not fail yet. And yes, I have said, okay, when it's not hitting 100K, and of course I was expecting 100K based on the model, and it's not hitting that, then the model has failed, etc., etc. But you might say I changed my mind, or I got more nuanced about it. But just everybody has to make up their mind. If you think it's failed, then be my guest, and it's failed for you. But for me, yes, the current price of Bitcoin is like 3 or 4 times below the model price. But look at the peak in 2013. At that time, it was 10x. Bitcoin was 10x above the model price. Did it fail back then? No, it didn't. It just crashed down back to the model price. And similarly, I really and sincerely think, in fact, I'm betting on it with my money, that the Bitcoin price will revert to the stock to flow model price. And yeah, maybe I should add that, you know, I had 3 versions of the model that didn't make it very easy to understand. So the original model was 55,000K. With hindsight, that seems to be the best model. Later, I updated that model with yearly data and euro data, and it got that's how he got to the 100K number. And then I got this very fundamental model, the stock to flow X model, that derived its values from other assets as well, gold, silver, etc. And that was the 288K model. And as much as we like to believe the 288 and 100K, I think with hindsight, we should say that the original model, the 55K, or let's say 60 or 70K model, that will probably turn out to be the better model. But you know, it's all very rough. I think that's the most important thing. Not at all. Even the inflation hedge thing. For me, Bitcoin is not per se a inflation hedge. It's far more. I like these old clips from the internet. What is the internet? What people in 2000 explain what the internet is, and nobody can really, even Bill Gates cannot really describe what it is right, and what it does for the world right now. I think Bitcoin has a similar function, and we can't really describe very well what Bitcoin is. And Satoshi said something like that as well in the beginning. But no, nothing has changed. I'm still in awe with the simplicity of Bitcoin, of combining the encryption and the proof of work and the peer-to-peer, those 3 fundamental technologies into one thing, where we don't need anybody to make an account. It's just a random number. The account, the private key, and the derived address is just a random number. Everybody can make that themselves. Nobody needed for that. Transactions, same thing. You can just make and send your own transactions. No need for a bank. And the network, peer-to-peer, that's how the music downloads and BitTorrent is. You can't kill that. So it's funny to see the central banks struggling with that. Like it reminds me of the telcos at the time. They can, and not right now the banks are saying, hey, you can't do Bitcoin transactions to fiat, or we cap it at $1,000 or whatever. And they're all fighting their existential threat. But in the end, probably they'll embrace it like the telcos embraced it. And that's, yeah, very optimistic actually.